The critical chart that I want to show today is the SPX on the monthly time frame, and I'm highlighting right here is the 20 month moving average, and you can see that there is reaction to it. These 2 months right here, that's in February and March of last year, you see a bounce off the 20 month moving average. April ended at low of month. Then you got May going up and then going down. Here you got, what is this? Probably August, September, ending low of month. So there's this thing about at the 50-month moving average. So there is something, and here you can see this reaction on this Fibonacci reaction off of this trend line, and here's another reaction off of the 20, another reaction right here off of the 20. So the 20-month moving average is a decent bounce level, and right now it's at below, right? Slightly below this because this is 4187. So pulling up the SPX, which is below this as well. So there is a potential of going lower after a slight gap up tomorrow. So we know there is gonna be a target maybe tomorrow on the 1 hour at 4200. So there's a potential to go up to the 4200 on the 1 hour. On the 4 hours, still gonna be that level right now. Yes, so 4200 on the 1 hour is where you see the first line, this trend line that goes down and meet it, and that's going to happen probably either. So the economic data, you got the PCE that's coming, the core, the personal consumption expenditure, which most likely is going to go lower than expected or forecast. And the reason why is because today you got the core PCE prices coming in slightly lower than forecast. You also have good GDP number, right? And this happened at 8:30. So you got continuing jobless claim being higher, durable goods being higher, core PCE prices being lower, and GDP being higher. So those were all pretty good data pre-market. And what happened in the pre-market, I'll show you here, is a favorable reaction right at 8:30, right here, right? So the number right there, you can see bounce on it, went up, and opened. I guess opened slightly. Well, this is previous day close, so opened slightly close to what the close yesterday, but then it failed. So my mistake was obviously being bullish um on this data, and normally that is a pretty good indicator, right? Especially when the economic data coming in slightly good. Now I know there was a negative sentiment. A lot of puts were being bought. So through the day I was watching this, right? I was going, there's just a lot of puts being bought throughout the whole day, especially in the morning. And this was very concerning to me. So I was like, okay, I'm gonna wait it out. First bounce I missed. Here is when I started going long, right? I sold some puts, meaning I'm expecting the puts to lose value if it goes up, expecting it to hit the 5 minutes, and then maybe sell some call to have. Normally, I like to carry a straddle to, as a runner just to get the intrinsic value to fall over time. Well, I was wrong. Okay, started going down, and I started buying some call options. Uh, Play around with some call options. Now it could have ended bad. At one point, I was down quite a bit, right? And the only reason I'm down quite a bit is because, right, when you make the wrong call, very often you're gonna, if you don't cover, you don't want to. My philosophy is, I tend not to, when I see that it's this is not a two, it could have been a three-wave sell-off, but there wasn't anything right today to indicate to me, like there wasn't anything. I know the VIX was high, I know the puts was coming in, but I just felt like, okay, and I'm also buying dated call options, right? These are call options a week out. So I was like, okay, you know what? I'm still banking in if I miss out, as long as it isn't a crash, and it could have been a crash. Very often, this could have just, what we call a three wave. One wave, consolidation, two wave, consolidation, three wave. The reason why I didn't really think it would be a three wave is because of this buying activity. This retracement was decent. And I was like, okay, normally what I should have done was have patience and waited for the afternoon. The reversal typically come in the afternoon, and of course, this is where I reaped my reward. Unfortunately, I didn't hold through the whole duration. And the reason I didn't hold through the whole duration is because I missed time. Okay, when you miss time and you're down quite a bit, you just want to get out, knowing that you don't want to lose the profits you made. So that's just my sentiment. I like doing that when I miss time, and missing timing is one of my pet peeves because I do time trading, right? The morning session, the afternoon session, you can see a clear distinction. And if you're bullish, wait for the afternoon session. This was a false flag, right? Once this happened and we traced down, I was too eager to get in, and this whole period right here played on my head because you're gonna see your account. Now I don't, I hide my account now, right? I don't look at my account, but I still, you know, peak at time. And even though you peak at time, it's gonna weigh on you mentally because it's going down, during these period where it's going until the afternoon, then it goes up. So, yeah, I guess just a bad. I don't know what the fault may be other than the fact that I was too eager, and the fact that I just did not think it would collapse. Like right when here, I'm saying, okay, it's gonna bounce eventually, but it just kept going down. And the reason why it kept going down is because of these put options. And I was watching these put options, and boy, were they coming in. And if you look at it, I think over here, it was like 6 million puts to, this isn't bad number of call options, but this is a lot of put options. So, yeah, so those put options were just coming in strong throughout the whole day. And at this bounce, I should have really, that was my fault. My fault was at this bounce, I still held on to half of those puts that I sold. I covered half of it, and I was still holding on to the other half of the puts that I sold, and it went back down. So yeah, negative for the, well, on profits, I'm positive, but I'm holding these puts, which means, potentially if it collapse, which I don't think it will. Tomorrow target is going to be 4,200. Looks to be that way. And the reason why is because you got some decent earnings. You got Amazon beating earnings. Okay, if you look at the after hours, let's show the extended hours on today. Right, Amazon, Chipotle, okay, Deckers Outdoor. This is consumer. So these are good stocks to kind of use as economic data because Amazon is a consumer stock. Chipotle is also a consumer stock, a retail consumer stock. And Decker Outdoors is also a consumer stock. And it's also play into the fact that the data tomorrow, the personal consumption expenditure, right, the PCE, not this guy, the the personal consumption expenditure, which measure consumption. This I'm expecting this to come in decent at 8:30. So when this come in tomorrow, I'm expecting the same results like I forget if it's 7:30 or here. No, it's gotta be this number. So I'm expecting this result tomorrow. To maybe open up at 4,200 or somewhere, maybe even even if it doesn't open up at 4,200, first target is gonna be 4,200, and then so the first 2 hours, even though it's open at 8:30, the first 2 hours. Let's take a look at this. So that's gonna pretty much give you bring it going back to the SPX and getting rid of the extended hours. So I'm expecting 2 hours up, which means a green and a parity on the hourly candle on the MACD. Maybe what's going to happen is on the release of the consumer sentiment. Now, maybe the consumer sentiment will come in before the Michigan inflation data. So I'm expecting this number to come in slightly higher or in the high range, like 66. And what that's going to do is maybe is going to do a spike condition, right? It'll spike up and then you get the reversal. And then that reversal is probably going to result in low of day. So I'm expecting maybe 4,100 on, let's see if that matches up. So that would be around 410, I'm assuming, if that line is correct. Let's say that line, that's going to be right there with the blue line. Yeah, right here, 4,100. So that's what I'm expecting, a close around 4,100 for the close tomorrow, which would put it like right here, yeah, right here, which is a decent level, support level on the monthly. So then you have, essentially you have Monday and Tuesday to either go down to 40, so 4,000 or bounce. Now, typically when it's at this level, I would assume it will be a bounce, okay? So we'll have kind of like a doji on the monthly, kind of like a small doji on the monthly, not a big one, but a small red doji. But there's a good chance it can end the month below and be like at this at 4,000 and low of day, kind of like these candles, right? These candles are all low of day candle, meaning it ends at the low of the month. And that's why I call low of day or low of month, right? Or it can be like a small doji at this Fibonacci, right? This Fibonacci you can see is a small doji. So it'd be at this line. Um, is that correct? Yeah, at this line 4100, around 4100 for Friday, and then a small bounce like right here on Monday and Tuesday of next week. Hard to say. Let's look at next week data and see potentially what may happen. So you do have the Feds, here it is, on Wednesday, November 1st. That is a reversal Wednesday. So we're looking for, if it ends the month at the low, let's just say 4,000, I'm expecting Wednesday to be the bounce, because I'm assuming what's going to happen is Jerome Powell, doing his FOMC statements and his conference, he's going to say things in regards to inflation being better. And I mean, it's just all about what people interpret the sentiment, and he's going to be slightly less, not dovish, but slightly less hawkish, especially if this ADP employment comes out slightly higher. Right, and this number will come out probably on Monday or Tuesday, the forecast number. And people will react on this forecast number, right? Because the forecast is a good indicator of what the actual is going to be. And if the forecast come in higher than expected or higher than the previous month, that is a positive sentiment as far as the stock markets, because Jerome Powell is seeing that, yeah, jobs, unemployment. Wait, this is the employment data. So lower employment. So if it's a lower number here, Jerome Powell, and same with this JOLTS job opening, Jerome Powell will, be less aggressive on his rate, or his not moving the Fed rate monitor. So let's take a look at the Fed rate monitor. And again, these rates are no longer important. It's a sure given thing that there will be no rate hike. So going forward, people are really monitoring the next two, right? The cut and the prolonged. So right here, so how long will they stay? And this is actually quite high, actually. I didn't realize it, but yeah, this is 23. So it's still a higher percentage of a rate hike than a rate cut, all the way to March of 2024, right? And wow. So May of 2024, you got even number of not hike, 40% not hike, 40% hike. So no wonder the market has been going down. I didn't realize these numbers have been changing so much. I mean, let's take a look at this guy. Yeah, it has been going up. Do you see that? So this is the reason why it has been going up. This is the reason why the market has been down, or trending down, and I didn't even really pay attention to it because it's so far out. But yeah, if you look at the analysis right now, it's still There's still a lot of analysis that is, I guess, in the positive sentiment bullish scenario. Did the SPY bottom? I mean, I'm looking through these guys and they are not correct, right? These guys, they're good at analyzing data, but they are not traders. They don't make the money on trading stocks. So they make money on subscriptions and on YouTube and like Brian Shannon has this VWAP and he's like, oh, this is a bounce scenario. Well, yeah, okay, this is a good line, but I also have this line on the monthly, right? You can see that it matches up. So it's not like this line is such a special line. It is this VWAP from whatever that point is. Let's take a look at it.
From the 2022 low and the all-time high up in that area as well. We still have a declining 20 and 50-day moving average. We've just dropped a significant amount here, and that occurred after this failed breakout. As I say, we came down and we came right into that 411 area. Now that 411 area is important on the daily time frame because it's the anchored volume weighted average price from the 2022 low.
So it's the anchor weighted VWAP. Okay, it's a technical line. Means absolutely nothing. Let's take a look at this guy.
Or is this all about forward guidance? Today we discuss some of the biggest bear
Yes,
commentaries
it's all about
right
forward
now
guidance,
to
people.
happen next. What about 1 week to months after? Do we see positive or negative results moving forward? Also, this earnings season, are we actually beating expectations, or is this all about forward guidance?
It's all about forward guidance. It has always been that case. You don't even need to say one or the other. It has always been forward guidance.
Today we discuss some of the biggest bear commentaries right now in the markets, and also we talk about the key zone that we've finally hit. Yes, we reached the most traded zone of the last 18 months, and we know this is...
The zone does not mean anything, honestly. At best, it'll wobble in this zone, I guess. But the zone typically, what he's talking about, this zone right here, this channel right here, right? So typically what happens is you'll go down and then maybe you play around with it. So that's the best case scenario, but that's still bearish, right? Because it hasn't touched this lower end of this range or this key zone that he highlighted here. This key zone that he highlighted here, he should have made this all the way down here to match this. I don't know what moving average that is. I would like to know what moving average that is. But it's good that he has it because there's a reaction to it. Let's see, maybe he'll...
Wall Street's favorite level. So what will happen here could dictate everything about the next couple of months. Dollars start to break out. This could be the most talked about chart on the internet right now. Join us as we cover stocks, commodities.
So let's take a look at Nvidia. Nvidia. So earnings potentially is still a while off, and yes, at this point, let's take a look at the weekly. It's at the 20. I'm afraid to say because of what happened to Meta. Now Meta did bounce, I'm assuming. Well, Intel Corp did beat Meta, Nvidia, Tesla. This is a lot of AI stuff. So I'm thinking it's probably gonna hit the 200. That's gonna be the first target. I don't know. Maybe it doesn't matter, right? This breakdown will that be a problem? I mean, already the semiconductor is below the 200-day moving average, and it's gonna approach this 50-week moving average, which has some reaction to it. Let's take a look at the monthly, which is right here at 130, and there's reaction on the monthly as well. So I would think the target is 130, because the MACD is still going down.
Together.
Hella fiberglass windows, tested for extremes, designed for your home.
Oh my goodness.
Around the world, including the macro lead indicators and the
I hate this chart. It means absolutely nothing.
An extreme
Fear
buy,
and greed means
that does it.
absolutely nothing.
In terms of earnings beat data, this earnings season, we're at 71% beats, 520 versus 216.
Nah,
the key.
that means nothing
Correction
as
territory.
well.
Let's
It's
talk
all
about
about
some
the
statistics.
forecast.
What happens next and how often three
Historical
so
data are
every
useless
10 of
as
the-
well.
and even one
All these charts are meaningless.
go into this correction territory and Wall Street's most traded zone. And by the way, there's a
That's
big
just the Fed
really steep-
rates.
Well,
It
guess
means,
what? You broke something.
take a look at the 10-year bond, right? So slightly trending down. Should go down tomorrow to this level on the PCE. Lower inflation means the bond is going to go down. What we should expect is the VIX is going to go down. Slightly down and then end up, because it's all going to pretty much, once this number comes in, and that's tomorrow, once this week. So like I say, once this inflation number comes in, this consumer sentiment comes in, what I'm going to see is that I'm going to see a lot of puts being bought up. So somewhere either 10 or 11, maybe it'll continue to go up, but there's going to be a reversal. That's my expectation, because I'm almost certain this target of 4,100 is set. The only problem, the only problem is tomorrow is option expiration, but that doesn't mean much because people keep saying max paying, max paying. Max paying doesn't mean anything, right? They can still make a lot of money driving this down to 4,100. So these puts tomorrow on the 27th, right? You can see they are already starting. They are already here coming in. Volume is still pretty high, right? Look at that. So yeah, they are poised. Now let's take a look at the puts. Oh, the call. The call option do have some volume as well. Don't get me wrong. So it's gonna really depend on which one moves more tomorrow, and it's really hard to interpret sometimes, but that is still my expectation. Is you're gonna end low of day 4,100, after 4,200 the first 2 hours, then it's gonna end somewhere down here on a collapse. Yeah, it's gonna be kind of like a straight line down pretty much, right? It's gonna have to be like one of those guys. Like maybe it'll touch the 5-minute. It's gotta go above the 5-minute if it's 40. If it's hitting the 4,200, so that's right here on these high. So that's like right here at 41.76. Is it? Yeah, 41.80, I believe. So somewhere like right here, 41.80. So is that gonna touch this 15? I don't know, it might meet up with the 15. So the 15 is trending down, so may meet up with the 15. So this is where it's gonna fail, is right at this level after the first hour, 2 hours, and then it's gonna tank.
Fair than you sentiment first. On the CFD side, that is basically the leverage contracts throughout everywhere there is retail traders bullish
means nothing.
out. We kind of guessed this would happen, and this is a good sign for the bulls and a good sign for structure to potentially be created down here in this key Wall Street level.
That means nothing. I'm telling you, these are means absolutely nothing.
And this is usually a time where, say, somebody that's looking at positioning in or a positional investor or something is going to look at this market.
Too much data.
Change.
Corporate insiders
are actually starting to heavily buy XLP when it comes to the markets. Now, this
PE ratio means nothing as well.
Position, but at the time of this update, I think it's sitting about 25, so it's dropped again. If it gets into the 15, that will be an extreme low. And obviously, we're expecting
it's going to get to the
15. We're in a capitulation. It's going to be fireworks on the market. So make sure to subscribe to this channel because we cover it daily here on the show. Now,
yeah. You know, I'm not gonna watch all these. I might watch them, but I'm not gonna record them. So I'll just end it here. And yeah. This is the guy that's only this guy is bullish or bearish. Hold this level at all costs. So is he bearish or bullish? He's bullish too. Like still, all these guys are way too bullish.